All right. Hello, everybody. Welcome back to another episode of Robinhood Weekly. We have a packed show today with a lot of stuff to discuss. We got the February monthly metrics from Robinhood, which we'll be discussing. We have the latest gold drop, which is a 2% brokerage match that we'll be discussing as well up until the end of March. So that'll be important for AUC, net deposits, all that good stuff. And then today, Robinhood announces officially they are getting into sports betting prediction markets with economics, politics, a bunch of other stuff that Vlad talked about they're going to get into. So we'll be discussing the pros and cons of that as a product vertical that they are expanding into. Tanner, Roy, how are you guys?
Doing good, a little late. And I'll say it's not my fault and it's not Amit's fault.
I mean,
did you have that in mind before we even started?
Yes.
Okay.
When you literally made us late, I'm like, oh man, I'm going with this. I mean, like, anytime I get a chance, it's always. I even try to use it at work. You know, like, hey, I'm running late. Tanner made me late. Who's Tanner? You don't know who Tanner is? Come on.
Yeah, Tanner made me late.
Tanner legit made us late today, though. It's like actually his fault. So
that is not okay. First, you showed up late, and then I asked for an extra second.
I showed up at 9:30. I was ready to go live. You needed your extra 5 minutes to get your beauty makeup done or whatever.
His makeup, yeah.
It's 9:34 right now.
Yo, you went to Tim Hortons to get a coffee. Do you go to Tim Hortons at all?
No.
Wait,
no.
Why?
Tim Hortons is actual trash. Don't like it, and McCafe is 100 times better.
They're gonna kick you out of Canada.
I don't care. The only time that you guys ever see coffee, well, I mean, I've had Tim Hortons, but like, if you guys are going to see a coffee around me, it's going to be Starbucks or McDonald's.
Wow, you're a McDonald's guy. Interesting.
Yeah.
All right.
It also happens to be the closest to my house.
Well, that's probably another reason.
Yeah.
Okay, cool. Let's get into it. We're going to start off with sports betting because that's probably what everyone wants to hear about first. And I have a lot of opinions on this. Roy has a lot of opinions. Tanner is a robot, so he has no opinions. So we'll see whose side he takes. But Robinhood introduced a college betting on the NCAA tournaments, and it's not just a one-off thing. Vlad says here they are officially launching prediction markets on Robinhood. And he starts off by saying, as a former mathematician and physicist, I'm motivated by the search for objective truth. How can we make sense of all the information out there, and who can we trust? And then he goes on to say, at the most fundamental level, there are the applications of capitalism to the pursuit of truth, they being prediction markets, market incentives, and the wisdom of the crowd sift through all the information out there to determine answers to well-specified questions and outcomes to important events, sometimes even before they happen. He then says prediction markets are truth machines. We're starting with politics, economics, and sports, and we will continue to broaden the coverage over time. As with any market, they will become better and more liquid as more people participate. If you update your Robinhood app, you will likely see sports betting for the NCAA tournament at the very bottom of the app. If you don't have it yet, it'll probably be rolling out in the next 24 hours. But it is officially live, and they are entering into the space. Let's start off with you, Tanner. What's your opinion on this?
Okay, so one, being the only person that doesn't have access to the app, I'd love to see it. So if any of you guys have access, that'd be a really cool screen share.
So, yeah. And there's a website, too, that has it.
Okay, so it actually shows the bracket there.
Yeah. Throw this up and we can.
Oh, yeah, it shows it there. Yeah.
Got you. And then you can bet all the way down to who ends up winning.
Correct.
Yep.
Yeah.
Yeah, and it's kind of like before where you can trade it back and forth. The actual payout there, you don't have to hold it until then. Robinhood makes a cent from this. Kalshi, I believe, makes a cent from this as well. And you're not betting against Robinhood, you're not betting against Kalshi, you're betting against other people. So Robinhood has no vested interest in who actually wins.
Yeah, I've always had like slot machines or anything along those lines where you're going and pressing a button and then someone else is going to tell you whether you won or not based on sheer luck. I've always hated that 100%. Never have done one in my life. Lotto tickets, anything like that, just sheer luck. However, with information betting like this, where somebody thinks that they have an edge versus someone else, I don't have any problem with that. If someone thinks that they have an advantage, like an information advantage on that, and they want to put money against it, I really do subscribe to what Vlad says about, like, this is how we're actually going to tell truth in markets. polling data can come out and say Hillary Clinton has a 98% chance of winning, but prediction markets during that time, I guarantee, would not say 98% chance of Hillary Clinton winning. So I think that there's, really good odds that, backed by millions and millions of dollars, that you're going to get someone's real opinion out of these types of events. And I think that's really interesting.
So is it good or bad for Robinhood?
1,000% good. I don't see a downside. If you don't agree with these products, if you don't like them, don't use them. And that's fine. Brokerages can offer tools that I don't agree with. I'm not even a big options guy. Never written a leaf in my life.
You're sounding very capitalist, not communist today.
When do I sound communist?
You're from Canada. That's in
Canada's going to kick you out, bro. Keep it up.
Yeah.
Wow, I didn't know that would be your take. Interesting.
No, I'm a capitalist, 100%. I think that people should be able to do what they want. If Robinhood is the convenience store, it doesn't mean that they're trying to get kids to smoke cigarettes or something. It's just an option if you do want to, that they have that selling ability. And where people store their money and where they make bets is the same sort of bet, in my opinion, about placing it on sports or on stocks. Obviously, there is ownership there as well. But to be frank, I think a lot of retail investors don't actually look at it that way, and they're trying to make some money.
But your name's Tanner, not Frank.
To be Tanner, I think that it is whatever I said.
Okay, Roy, your thoughts on this?
So this will probably go on a little bit, and so like if you want to interject, like in the middle of it, like just answer. Like there's basically three parts of this for me. So one is like the legality. I had some folks that commented on a post that I did on X regarding this. They're like, what Robinhood is doing is illegal. That this is gambling, that they need to have this kind of gambling. It's not. This is events contracts. They're not the casino. I know, people call the market the casino, or they call Robinhood a casino, or they say it's gamified. But the reality is a casino has a vested interest in getting as many people there as possible. Robinhood does too. But also in winning. Then the house always wins eventually. Like the odds are just stacked in their favor. Robinhood doesn't care who wins. They're just providing a platform for this. And so these are very much event contracts. By no legal definition is this actually gambling. By no legal definition is this illegal. CFTB even shut things down when they did the Super Bowl events contracts. I have to imagine that whatever was the issue with them got cleared up. Otherwise, I don't think they'd be putting this out, because it would make no sense. And then they say something and they have to take it back down. So I think this is just the direction that Robinhood is going. So I am lowercase L libertarian. And so what that means is, like Tanner, I agree that this sort of thing shouldn't be illegal as far as, events contracts and this kind of betting. I don't think it's necessarily immoral. I do think it's a net negative on society. Like I went long into it with Bootleg Weekly, but as far as like personally, like I will not be touching this. The reason why, and I do see it, even though Tanner used language regarding like futures, like if you know this better, maybe it works for you and you can make it work for you. Like some guys are sports guys and gals are sports gals, and they can make informed bets and do well. And if somebody does that, that's their business. They should be able to do so. But it's a little bit different too. It's based on like, it feels a bit gamified. So I have a personality. I know that I could get enamored with this product very easily, or at least I could have in the past 20 years ago. And so for that reason, I don't, touch alcohol, for instance. I don't touch things like this just because I know I can get really sucked in. MMORPGs, same thing. Like back in the days, like, nope, can't touch that. That will just suck me in. I need to be focused on what's most important in my life, and those things are not. So, but I know how to invest, and I'll just use my money for that. I won't even use fun money for this, not once. And then lastly, as an investor, yes, it's good for revenue for Robinhood, but there is a downside, Tanner. I have to disagree with you with this. And I think it's reputational. I think that they do take a reputational hit. I don't think it's massive. I don't think it's like Tesla brand damage bad, but the reality is over the course of this last year, they've taken and made a concerted effort to really focus on becoming, in the eyes of a lot of people, a legitimate platform. They already were legitimate, but I mean, back in 2021, they removed the confetti. People still talk about it, whatever. They've added a lot of long-term investor type things. They're adding like ETFs, they're adding, robo advisors type stuff. They have like the IRAs, they have the Roths. They built those out very well. They're adding products and features to that. Futures is fine. This seems like it detracts from that. That if like none of those things have been done and they launched this product, it would be like, oh yeah, it makes total sense. Robinhood is all about confetti and gamification. But I feel like that they've tried to shift away from that, and yet this pulls them back a little bit. And I do think that there might be a few people that leave the platform over this. I think net, it's going to be a positive for revenue. Like the other last thing that I fear too is that it's going to be fairly easy just to like sell a stock and then use the unsettled funds. Maybe I don't know if that's the case, to bet here. And it's like, man, if you want to do that, your money, you should be able to do that. But I'd almost prefer that this was just like a separate app, like the credit card app, and that it's a little bit more awkward to transfer things in between, just for the extra level of protection for the individual user. I know that's hand holding. I know that would hurt their revenue on this, but that's my personal preference. So I'm neutral towards this. I'm not like, yeah, this is awesome. I'm not like, this is trash, this is terrible. I'm like, there's some good, there's some bad. It's okay.
Amit?
Okay, so my question for the people, because you're not alone on this opinion, Roy. A lot of people are saying that it should be in a separate app. My question is, why are options not also in a separate app?
Well, that's a tangential product to the stock. Like the underlying for option is actual stock. So if you are selling cash secured puts, you are agreeing to buy at a certain strike at a certain date 100 shares of that stock per contract. Or on the other side, calls work reversely, and even spreads, level 3, level 4 options. Level 1s will never come for SoFi. Yeah, but no,
it seems like your problem is that it's incentivizing gambling. So forget that it's attached to the underlying stock. That to me is irrelevant from the point of, is it gambling or not? If options are gambling, which I would love to hear the counterpoint to why options are not gambling, why should gambling be allowed in the same app as buying long-term assets?
What's your definition of gambling?
Well, when I think of an option contract, there is a start date and an end date, very similar to a basketball game. I bet on this stock at $10 going to $15 a month from now, a year from now, whatever it may be. And if it doesn't get there, I lose all my money. Or on a put, if it gets way below my level that it needs to get to, I have to bag hold that stock because I lose a lot of money in my collateral. Like you can manipulate selling calls, selling puts, buying calls, buying puts in any way to be one person loses everything, or at least a good chunk of what they have, even if they recover 70, 80% of it. And one person wins everything, which to me is the definition of betting on a basketball game. Like if I pick Duke or Kentucky, either Duke or Kentucky wins, and whoever bet on Duke wins the money. Whoever bet on Kentucky lost the money. If that's not gambling, if options aren't literally trying to sing, hey, maybe this thing goes up, maybe this thing goes down. Even if I have 2 years on a leap, I don't know what the hell's going to happen in 2 years. Like you are literally, we could have a pandemic in 2 years. Like who knows, right? If that's not gambling, I don't know what is gambling. So if we can assume it is gambling, why are options in the same app?
So let me ask one more question before I answer. How is investing in equity not gambling?
Because if you buy a stock, you can hold it forever unless the company goes bankrupt. But an option has a start date and an end date, like a sports contract. There's a beginning and an end to the winner or loser. But going to your point, if investing in a stock is gambling, well, then what's the difference between sports betting being in the same app?
So with the options, like they can continue to be rolled. These events contracts cannot.
No, but what if you buy a call? What if you buy a call a month out? How are you going to roll that?
Easy. Like you can sell in the money. You like I've gotten good at rolling. I'll say on Palantir, man.
But you're doing that with covered calls. The majority of people buy calls. They don't sell options. We know that for a fact. The majority of people buy options, and they lose all their money.
But there's other tools too for options too. It's not just like you're acting like the only thing that people do with options is simply use that as a long-term or short-term bet on a stock. Sagig mentioned options can be more than just that. They can be used to hedge. I use that on Block. I bought naked puts on Block because I'm like, it's a company that has a terrible CEO. They're very
But Roy,
exposed.
why aren't you gambling when you're buying those puts?
Oh, I'm using it to hedge my position. So
No,
I'm
no,
not
no, no,
using
no,
it
no.
like
Yeah,
the point of the hedge.
but block has to go down for your hedge to matter.
Yeah.
But what if it doesn't go down? That's gambling at that point.
Not really, no. It's like not any more than like if I bought physical gold or silver. Like eventually I'll have to sell it. There's no end date on that. That's true. But I can use that as a hedge, or even cash can be a hedge. But in this case, I'm like, okay, I actually hoped that I would make zero on that because it was a hedge. The only way that I saw myself making that was either A, Jack Dorsey like really messes things up, which I mean, count on Jack for that. Or B, the entire market, more realistically, and we've seen that, has this massive downturn, in which case my hedge protected me from some of the downside. That's all it was protection. The other thing that I've used options for often is when I don't have enough money to enter a position as fully as I'd like to, I'll buy some options contracts with the intent to exercise those at a later date. And I've done that before just because I'm like, hey, I don't have the money now. I see an opportunity. That's not gambling. That's me just saying, okay, I'm going to put a down payment here and I'm going to finalize that payment before the expiry or on the expiry.
But Roy, what if the stock absolutely gets murdered before the expiry? Your options are worthless at that point. Like if you buy like Nancy Pelosi is down 50% on her in the money Google calls because Google has collapsed 20%.
Yeah, I don't see it as the same. Like in the investment world, there's even a distinction too. Like that's one of the reasons why the CFTB, I think I've got it right, is involved. Like they're not involved in the SEC stuff, but this is like legally and by most people as well seen as a clearly distinct boundary that this is not the same as investing versus options versus futures. They certainly are. So I am not convinced by this, and I'm curious of Tanner's perspective. If I am betting on Duke beating Kentucky, I'm doing, let's say, a ton of research on why Duke's basketball team is better than Kentucky, which is a skill for a lot of people. Like some people blindly just bet and do whatever, but there's other people who like dedicate their life to like really studying the game and then they take these sports bets.
Yeah, now and that happens whenever people like if you can find a cohort of people that have a success rate over their career that's higher than 50%, it can be not gambling. They can find alpha that other people do not have.
100,000%. And with options, I think there's a lot of sophistication, just like you're talking about, Roy, about hedging and betting against Jack Dorsey, all this stuff. But at the end of the day, all your qualitative reasons or quantitative based on the company analysis earnings that you've done is exactly the same as someone looking at why OKC is #1 in the Western Conference and why they're probably going to beat the Mavericks, who just had Anthony Davis and Kyrie Irving get out for the season. Like each of those events, which they are events at the end of the day because they're binary, either you win or lose, are rooted in data. It seems like you have a problem with the type of data that someone's looking at when looking at an NBA game versus the data you're looking at for Jack Dorsey being a crappy CEO. And to me, those aren't intellectually consistent because they're both losses or wins at the end of the day for one person.
There's only one legitimate use of the advanced contracts. It's just betting on the outcome of that specific thing. Now you can sell it before or whatever, but yeah, options, they are a tool in the tool belt that can actually be used. Like, a couple of people mentioned this, that is insurance gambling, Amit? If you get like, so I'm married. I've got a wife and kids. I bought an insurance policy that my wife will be set for life if I die. Am I gambling?
Yeah, no, I don't think you're gambling, but I think your one example of buying puts as a downside hedge is not the overall way that people use options. In fact, I would say it's one of the least consistent ways people buy options. If you look at Wall Street bets, people buy calls and they lose most of their money. And that is, I would say, at least 75 to 80% of the options market. Like, I don't think we can be that sophisticated to say, oh, well, people are successfully hedging their positions like Citadel. It's like, no, most people buy calls on Netflix on earnings. It tanks, they lose all their money. So that is the majority of options investing. And we know that.
So in zero TTE are just downright gambling, especially out of the money. So I think that we can agree, Amit, that some use of options are certainly not gambling. It's insurance. There's different tools, putting down payment and long-term. and some are. Versus these events contracts, they're not legally gambling. I understand that, but they are just 100% pure a gamble.
Which
Okay,
one?
so then why don't we take out the buying of the calls from the Robinhood app that match your definition of gambling, and let's put them in a separate app? Because if you're against gambling in general, I don't get why we get to have some parts of gambling being part of the product. That's like saying some stocks or some coins. Like none of us had a problem with the Trump meme coin, right? We had a problem morally with it, but we had no problem with Robinhood offering it. So
Yeah.
I had no problem with them offering it.
And neither did you, Roy. You were happy we were getting those juicy Trump revenues. So is betting on Trump not a gamble versus betting on Duke or Kentucky?
Oh yeah, it absolutely is. There's no underlying. There's nothing else you can do. It's just it's a pure gamble.
So then, should we move crypto to a separate app?
But there's no end timetable on that too, and that's what's one of your parts of your definition, I believe, for gambling is the issue is that timetable. Well, meme coins don't have that.
No, but if your bag holding a meme coin down 99%, does the timetable matter at that point?
No, but yeah, I would say the timetable is not integral for a definition of gambling. So
okay, so then if you believe it's not integral for a definition of gambling, and the Trump meme coin is by definition gambling, or bonk, or whatever other stupid coins they listed last week, shouldn't those be on a separate app to discourage long-term investors from clicking on the Trump meme coin and buying it?
I would prefer that, yes. But I mean, reality is that's not going to happen. So, and you may be conflating as far as like what I'm saying, like legally, thumbs up. Absolutely. No problem with that. And I would prefer a platform like Robinhood to offer this just because it's a lot better for the end consumer because they're going to use it anyway. But I'm neutral to it just because I do think it detracts from the message that Robinhood's trying to convey of like, hey, we're here for serious investors. This, frankly, is not for serious investors. It's not. It just detracts from that. I still think like net as far as revenue, it's fine. Robinhood's an incredible company. It does not change my thesis at all. It's just that's the actual downside is it takes away from that serious aspect that they're trying to portray. And I think that they're effectively portraying it. So it feels a bit like it's a little bit different. But when PayPal acquired Venmo competed as a product with PayPal branded, which was just idiotic. This takes away a little bit from their main bread and butter platform. It detracts from it slightly. And I don't like that part. That's why I'm neutral in that, even though I see it like, hey, this is probably good for the end consumer just because it's going to be cheaper. You're not betting against a house. You're betting against each other. It's easy to use. Overall, like it's a product, not a great thing. But if Robinhood's doing it, it's better than it just being left in the hands of like a shady bookie that's in a bar that if you don't pay up your tab, he's going to break your legs. This is way better than that.
Can I ask a question though? Is it just the sports side or is it event contracts in general?
Events contracts in general.
Okay, so why can't the Fed funds rate tool that they're going to be rolling out here be used as a hedge on certain rate sensitive stocks?
That's a good point.
Yeah, no, that's fair.
Like use it as a tool of your arsenal to hedge positions.
No, that'd be very legit.
I think this is what Tanner is getting at. You don't like meme coins, but you're obviously a fan of Bitcoin. You don't like sports betting, but what Tanner just said makes a lot of sense. You're a fan of betting on JPOW saying XYZ to hedge your position. There's so many gray in between the black and the whites of these larger categories, crypto event contracts, that it becomes weird to me to then separate them from the main app because there's legitimate things to hedge your portfolio, like Tanner just mentioned, but then there is just downright degenerate gambling, which is what you're talking about, Roy. So that's why I'm against this idea of separating them from the core app.
So as a like a product thing, like that doesn't make sense. So where I'm coming from, the standpoint is like thinking about it. And honestly, these products, at least based on what Teva said, I didn't check out these, but he basically indicated there's a surge of betting and gambling among younger generations, younger than him, and in his demographic as well. And I mean, like, honestly, let me ask you one question, and I'll just continue this thought if that's okay for both of you guys. Do you think for the average person that if they put money in this type of gambling, or they invested in the stock market, which do you think that they're going to do better in long term?
The stock market.
The average person.
The markets.
The stock market.
Yeah, absolutely. So I'm coming at this from a Papa Roy standpoint as an old man, I've been around a while and I've seen people absolutely make just terrible mistakes that ruin their life. I would hate it, just personally, even though a person has a right to do whatever they want with their own money. But if we made it too easy to, like, you can pull money from your Roth and it warns you and says that there's penalties, but you can pull it, put it in your main account, bet it all on the Lakers and lose that. And then boom, you've just nuked your freaking retirement. Now you can do that with options. You can do that with futures and everything. So I get where you're coming from. I just wish that there was a little bit more of a barrier, that they didn't make it like super easy and clean like Robinhood does. They make it really easy. That's one of the best things about the user interface. But I have a feeling that there's going to be some people that just perhaps that they're finding the markets like motions and everything. They can trade well. Maybe they have a gambling problem and they're like, you know what? This just sucks them back in, and they blow up their freaking account just because of this. Again, people have the right to do it. It should be legal. I'd prefer that someone like Robinhood offers it than somebody else, because I mean, that's better than like the shady bookie that's going to break your legs or take your house or whatever. But I can't say that I love it just from that aspect, because I feel like that there's going to be some damage.
Do you think at all you're playing moral police here? Because then we shouldn't allow people to take margin. Like, there's just so many things, right, that they make a lot of money on that we've benefited on as investors that are obviously bad. Taking out margin is not a good thing.
Let's talk about margin then. So how many, I guess, Tanner, are you using margin at all, or have you ever sent it for margin?
No.
Okay, so then this is just directed to Amit. You're Robinhood Gold, so I'm assuming you use at least that $1,000 of free margin. Yeah, I do too. Like, it makes perfect sense. There's literally no downside unless you have a super small account. And like, it's just almost no downside for that product. Like, it's great. One of the best things about Robinhood Gold. Well, it's actually not. It's one of the small things, but just like a nice little perk. A person should be able to use margin, but when I signed up for that, there was a lot of information that I had to look through, multiple clicks, some consideration there. And I don't mind that at all. Like, a person knows what they're getting into. And if they don't, shame on them. It's their own fault. With this kind of events contract, I don't know. Like, I'll actually need to, when I see it on my app, I didn't see it earlier. Maybe I opted out earlier. I'm not sure. But I'll need to pull that up and look through. But
it's part of the derivatives product, so you see all the disclosures there.
I don't remember seeing that before. So I know that there was something, but I didn't see it at the same level as a margin.
But Roy, even if they give you the disclosures, it is really easy to just press yes. I'm above 18, blah, 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 and then get free money from Robinhood.
That's their problem. If a person does that, fine. But
yeah, but then how is it not their problem if they blow up their account on betting on Kentucky versus Duke? Why is it not the individual's fault? Why is it the company's fault at that point?
I didn't say it was a company's fault.
No, but you said that it should. You said,
but it's a reputational problem.
Yeah. So, but isn't that's my point? Isn't that the same for margin? Isn't that the same for options? Like, isn't that the same for these stupid crypto coins that they've listed?
It's not the company's fault for offering it, and there are legitimate uses for any of the product. I feel like it should be legal. It's fine, but it shouldn't be. If a person clicks yes and ignores all the risk, I mean, that's on them. But I don't think it should be 2 clicks of a button and you're moving your money over from your Roth to your main account, and then you can do sports betting. Now, I don't know that that's possible, just because the funds might need to be settled, would be my guess. So it may be a little bit more than that. But I like there being a little bit more of a barrier, even in that sort of thing, like a cooling off period. I think that there's, a possibility of reputational damage. There's going to be, I mean, we've already seen this with Robinhood before, with the GameStop stuff. We've seen it with a few other things too, where like the screen displayed something that was totally inaccurate as far as a balance for a young man, and he ended up taking his life. Like, I don't want those things to happen, even though I'm like, yes, them offering this, it's fine. They'll make money. It should be legal. There's no issues. There's no legal gray areas. It's perfectly clear and fine. And I know a lot of people enjoy it. It's fine. But we can't pretend as Robinhood investors that there's literally no downside. There is. Takes away from the legitimatization, if that's a real word, of Robinhood as a platform in many people's eyes. And it will take away from the net worth and the long-term investing aspect of some investors. Some people will not handle this product well and should not touch it. Same with margin, same with options. Same with futures.
I think that a lot of the people who ended up signing up for Robinhood crypto were not brokerage users. That there was a large cohort of people that came to Robinhood for crypto. And I think by them doing this, they are going to bring on a lot of people that are coming for the sports betting side of it, right? That potentially they have better or favorable rates, or if they can move it over to the cash account and make APY on the side, then it might just be a better experience than, Kalshi itself or some other prediction app. So I actually just think that this falls into their wallet share idea, and that it's not a reputational hit. I'm not on the moral side of it or anything. I think, I don't think cigarettes should be banned. If people want to, I don't smoke. If people want to make that decision, go ahead. Potential disclosures or whatever need to be set up. I'm sure that is already part of signing up for Robinhood Derivatives LLC.
So let's talk about this, because I wanted to mention this too. Like, I think that this is a dream, but a fantasy scenario. And I don't mean that as offense. Like, I thought about this too, Mahogs 9, where like ideally somebody makes a lot of money from this. They've never invested before, and Robinhood makes it real easy to transfer things the other way. Really, you don't have to transfer. It's right there. You're like, you know what? Why don't I invest in NVIDIA, this quality company, and put some money in there for my winnings? Do we actually think that most people that are on there that are betting and doing this kind of betting will do that? I absolutely don't think so. I think that normally the thing that happens is when you get a big win, you get this adrenaline surge, especially if you have win after win after win, you risk more and more and more. You think that you're invincible. I mean, I've seen that, frankly, on the stock market as well. I think it's very unlikely for that type of person that's getting those big wins to do anything other than just have hubris and think, okay, I'm going to keep winning forever, and then I'll be a millionaire, and then, whatever. Yeah,
but there's 1,000 products on the stock market that offer 20x leverage, 50x leverage, all sorts of margin. Like, I mean, this is not something that the stock market doesn't offer, that now all of a sudden, betting on a sports team or whatever is, I don't know. I actually don't think it's nearly as bad as some of the products that they offer with, insane amounts of leverage. And as far as I know, Robinhood won't offer you margin to bet on a sports team.
Yeah, I don't think that they do, and I think it has to be settled. So there was a cool comment. SV at 10:05 said, I got the Robinhood app for crypto. Now most of my money are in stocks. That's awesome, dude. That is awesome. I hope I'm wrong on this. I hope that, this leads to a lot of people that are just gamblers. And if you enjoy doing that, I'm not like throwing shade. Don't think that. It's not for me. But, if people just do that, and then this gets them into legitimate investing in whatever, futures, into options, into equities, even into crypto, great. That's awesome. I just think we're going to see it the other direction.
So in 2020, I invested around 20 grand into a biotech that went to zero because I thought they were going to cure all the problems in the world. On Robinhood, Robinhood made it very easy to buy the stock and keep buying it. I lost all my money. I don't do that anymore. Now I invest in Tanner's thesis on NVIDIA because he got me into this thing. So I have no idea why we are trying to police how individual investors engage in the markets. If someone wants to blow up their account and nuke their Roth into sports betting, let them do it and let them realize, oh yeah, this sucks. I probably shouldn't do it again. Like, there is no way that meaning Robinhood, can become the arbiters of like how you should invest, because at the end of the day, they're a platform. They can try to have some restrictions, not have penny stocks, stuff like that. But at the end of the day, like, individual people need to make mistakes. And if that person, if that penny stock went to the moon and I made a ton of money and I then wasted all my money buying 17 other penny stocks, I would have still learned my lesson. So I don't see the downside in this. If someone loses their money, like, what's the headline? Trader loses money on betting on Kentucky over Duke. That's the headline that's supposed to give a negative reputation for Robinhood.
By the way, Hood Retail Show, his post, he just said, this is just a giant gateway into investing the app makes possible. This is that is like the dream scenario, and I hope it's right, that this is the gateway drug, the sports betting into legitimate investing.
It's definitely
that's the way that Robinhood can market.
No, but even if it's not,
that's for sure.
let's say it's not. Like I think that's like a 1% probability. Even if it's not, Robinhood's going to make a shit ton of money off people just gambling to gamble instead of using DraftKings. Why is that bad?
It's better than DraftKings.
I also think like we're acting like sin stocks get delisted or something. It's like, I don't know. Robinhood, I don't see the negative of people going, oh, they just opened up this new product, I'm leaving. I don't want this 2% match. I don't want, free commission, best UI, because other people are trading sport. Like, I just don't see that.
You know what I found out today? A lot of people hate Robinhood because people's arguments that I was reading today were so unbelievably unwarranted that to me, this just felt they hate Robinhood doing this. They hate that it's Robinhood innovating and continuing to build out products and expand to new verticals. They cannot stand that Robinhood and Vlad is pushing the envelope and they're going behind this moral guise of like, well, it has to be in a separate app. Like that was not just Roy. Like most of the comments I got today, it should be in a separate. I'm like, okay, so you're totally fine with gambling, but it's in a separate app. Like the logical deduction really makes no sense here. And I think people are just hating Robinhood and they're hating Vlad.
Well, obviously I'm not.
You're not, but a lot of the comments I saw today was
like Robinhood is one of those things people love to hate. Tesla, likewise. PayPal for some reason had its time. People just like to be haters, but so I think of it this way too. Like, as far as like, let's imagine there's an alcoholic and he goes to like a pizza place, his favorite pizza place, goes there, like 5 or 6 times a month. They serve alcohol there, but that's, just kind of tangential. New ownership comes in, or maybe same owner, and they just want to make some more money. Now they have a whole bunch of ads. Like when you sit down, the first thing you see is a drinks menu. All the time when servers come up, they're offering you a beer. They're asking what you want to drink. And you see like just wall after wall of these advertisers pushing you towards that. If you're an alcoholic and you've tried to break free, you're like, okay, I could handle like it being kind of separate, not top of mind, but it's all around me. And you feel yourself succumbing to that. You have faced the sad challenge of saying, okay, do I hope that it's going to work out and I won't succumb to this temptation that I know is in me? Or do I have to leave my favorite restaurant and go somewhere else just because I'm too weak? I can't handle the temptation.
Hold on, Roy.
I don't think Robinhood has ever been that app, though.
Your favorite pizzeria cannot acquiesce to one person.
I'm not saying that, but I'm saying that there is a downside here. And there are some people that do fine in the stock market and invest, but are absolute gambling addicts. And this is not a good thing for those people. I'm not saying we should handhold. I'm saying it would be nice if there's a little bit more of a barrier and separation. I would personally prefer a separate app, even though that's less meaningful revenue. I know it is. Any friction you add, that's reality. That's all.
Wait, but Roy, what percentage of investors are you saying have a gambling problem?
Oh, I'd say probably 5 to 10%. It's going to match the general public.
I say it's like less than what you think 25 million Robinhood users,
bro. Okay.
500,000 of them have a gamble. No, not an option, not their degen. They are addicted.
Whoa! You called options degen and gambling, so you can't back that out.
No, 100%. But there are ways to be degenerate. I.e., you could sell some puts at Tesla at 230. I could say that's degenerate because Tesla's probably going below 200. But that's still a form of gambling that's not buying a call next week expiring at 240. But you're making the claim that 10%, 2.5 million people are addicted to gambling is your argument. I like that have a medical diagnosed problem with gambling.
Oh, not medically diagnosed.
I don't think he's being that serious.
No. They're not addicted to that. No. If they're not addicted, no. So Michael Jordan, right? When he was addicted to gambling, his issue was he would keep losing and keep betting more of his money and losing. When I gambled on a biotech, lost 20 grand. And because I'm not addicted to gambling, I said, you know what? I'm not going to do this again. I think the far majority of Robinhood investors will lose a lot of money, 20K, 30K, 10K, 5K, whatever's a lot of money to you. And they'll be like, oh, I don't like this feeling. I'm not going to do that again. But a gambler will keep doing it. And I just don't think that's the majority of investors on Hood.
Yeah. And also, I don't think that Robinhood needs to own 100% share of the market. I think that there is, if people do have that sort of problem, which I also think lives right on Robinhood. I mean, even the whole reason why Robinhood got popular was a GameStop phase. And that did create a lot of long-term investors, but they were in there to degen. And so I don't know. That is a large part. If you find that that's not something that's healthy, you don't like the confetti, something like this, move your investments to Acorns or something. Like, like there are platforms to make it really friendly and no gambling products. Robinhood has never really been that sort of app. They've offered options for a very long time, cryptocurrency. I think that this fits right into their niche.
And Spencer has a good point. If they are legit 10% gamblers, they would have just been gambling with options anyway, which is my point. If all of it is gambling, then why are we making the distinction between Kentucky and Duke versus
they would go to stocks. If you think about Dave Portnoy, whatever. Whenever COVID happened and then all the sports betting went down, he just became a penny stock investor. Like they just moved the vehicle in which that they thought was like, I think he was even using Robinhood. I could be wrong on that, but there is definitely a level of degeneracy that is on brokerages. That's for sure.
Yeah, but there's some people that'll do that both ways, but like the reality is there is a distinction in most people's minds between investing in the stock market and gambling on sports teams. I'm not saying one should be illegal or whatever. Robinhood shouldn't offer it. I'm just like, there are going to be people that are going to get blown up from this. That's on them ultimately. It's not the company's fault. That's just not a great thing for Robinhood though. Even if they're making revenue. But the other thing is like there's going to be people that leave the platform over this. I still think they'll get more people. I still think that they're going to get more revenue. Like it's a net positive for Robinhood, but it's not.
Roy, who's leaving?
Legitimately, who is leaving?
I had a person that told me, multiple times that, they have a gambling problem, a gambling addiction. And they're like, I need to leave over this. I know I cannot.
That's self-awareness. That's good on that person.
And you know what? Robinhood should create a thing that they have to sign, whatever, give some real verification, and Robinhood will never let you back on that part of the app. Because that I'm pretty sure is a system that is created in casinos. You can sign a thing to say, never let me re-enter. No matter how much I beg and plead, never let me re-enter.
No, but outside of that one person, like what? Out of the 25 million people, a couple thousand might leave? Maybe?
I mean, I don't even believe that.
Probably more like less than 0.5%. Like it's going to be small. They'll gain more people from this than they lose. So if we assume that 3%,
I can't imagine it's hundreds.
So I don't know. Like I saw several people, but like one person, like it's hard to take comments seriously. Like people do troll. Like this is a person I think was being very legit. But there's people that are like, I'm leaving Robinhood. It's like they live in like New Zealand or something. It's like, come on. But no, like the reality is there's some people that should leave, that have the self-awareness. That should be a feature, Tanner, absolutely, of like, hey, I want to opt out, never be able to opt in again, period. Great, perfect. But like I'm not saying illegal, immoral, Robinhood's not doing something wrong here. I prefer them to do this, in fact, over DraftKings. I think DraftKings is a toxic model. And encourages even greater degeneracy. It's kind of like 24-hour markets. Like I'm like, hey, it would be preferable and probably better for most people, not all, if those didn't exist and we just had that set hours. But if it's being offered, it's better that it's being offered by.
Roy, I don't even get how you can make that. How can you make that claim? It would be better for most people if we didn't have 24-hour markets. Like, how do you get to decide for the majority of people that it's better for them to stay away at 2 a.m. from the markets?
I'm not deciding. I'm just saying the outcomes would be better.
There are definitely some people who draw that line. Famous people that I can think about that hate the 24-hour markets, but I'd also think that their schedule really aligns with that specific, portion of the day that they can trade in. And not
I bought some Robinhood this morning at 39 on the 24-hour markets. It worked out. It was at 42 today. This is a net positive for it's democratizing access. One of the byproducts of democratization is you're going to get some side effects.
There is definitely people in this world that have alpha on sports way more than they do on companies. That they watch every game, they follow everything, they follow all the injuries, they know everything. And that is their alpha. I don't see a reason for them not to have those tools if they're available to quote unquote traders.
Sure. I'm just saying there's a downside. Same with 24-hour markets. There's a downside for a lot of people that don't understand like the slippage is the wrong term, but it's a low liquidity environment where there's irrational moves, like even more so than the market, that make no sense. And if people are trying to trade them and don't know what they're doing, they get burned. And hopefully they learn from that, but not everybody does. So I would
There's a
prefer,
downside to offering penny stocks.
but I would prefer, and we don't offer that on Robinhood yet. We should, but like I prefer that over this product.
Wait,
but,
you prefer? Well, hold on. You prefer offering pink sheets over sports betting?
we're talking about OTC
OTC stocks. Yeah.
Yeah.
Absolutely. Yeah.
I actually agree with Robinhood banning those because those companies are so shitty and they lie to you and manipulate. Versus sports betting, at least you have a 50-50 kind of chance.
The Trump coin, like, come on, man. It's more legit than like half the cryptos offered on Robinhood. And I have no problem with those either. So anyway, like 24-hour markets, if they didn't exist for anybody, that would probably be better. Since they exist, it's great that more and more people are involved, more and more institutions are involved. It provides greater stability, greater liquidity, greater understanding for individuals as well. And I love that Robinhood leads the way in offering that. So I see it that way with this betting thing too. Like, this is a trend. It's going to happen. It's inevitable. I can't wish, hope, pray it away, whatever. It should be there, and it's fine that Robinhood offers it. It's not pure upside. There's some downside for individuals, and there is a little bit of downside for the company, even though it's a net positive.
Yeah, I mean, look,
I didn't even, to be honest, I didn't know anyone was leaving or anything like this. But hey,
I don't think anyone's leaving. Like, if they did offer pink sheets, right? I wouldn't love it, but I also wouldn't hate it because, like you said, you have Trump meme coins, you have stupid stuff you can trade. There's already penny stocks on Robinhood that are probably going to get.
Yeah, I didn't even mean OTC. I just meant like
really,
you can buy companies that are falling about to be delisted. You can buy them today.
But then Roy, would you want those penny stocks in a separate app?
No.
Some of the companies.
This is the part I don't get about your argument. Why does it have to be in a separate app, even though you agree these other characteristics are just as stupid as betting in sports?
I mean, the Robinhood app itself was designed specifically for equities. And it makes sense that you add other kinds of equities on there as well, whether they're officially listed on the NASDAQ or the NICE, that they're OTC stocks or penny stocks. That's fine.
Who cares what they're originally
expanded that's fine.
Yeah, but Roy, they were originally created for equities in 2015. The company has fundamentally changed. Are we going to hold this company to the standards of 2015?
It's fine that they do this. I just wish there was more separation. That's all I'm saying.
I can't wait to see if that gets added to their monthly metrics. And Robinhood, if any of the team is listening to this, please bring this up the ladder, especially to the IR team, to put contract volume on the monthly thing. I'd love to track how that's going. That'd be phenomenal.
And I did see a couple people kind of probably joking, like, I'm going to be banned from the next Robinhood event. Like, that's the best thing about Robinhood is like before we even we've shared this before, but like real quick, when they had invited us to ask the questions during the earnings call, they said, hey, if it's a good quarter, you can say it's a good quarter. If it's a bad quarter, it's a bad quarter. If we did something that you didn't like, say that we did something you didn't like. We want that. And they're legit. Like, I believe them. Yeah. So I'm not, like, none of us are paid or sponsored by Robinhood. We all like Robinhood. We're all Robinhood investors. We got a free t-shirt. Yay. And they're a great company. Love the company too. Love what they're doing. It's my main app as well. But that doesn't mean that every single thing that they put out that we're all going to be like, this is the best thing ever. And
100%.
No, we're going to shoot straight with you guys. And the three of us will have some different opinions.
Yes, and we can disagree. For those in the comments that are like, Amit and Roy are debating too much, it's like, this is the whole point. Like, the whole point of a weekly podcast, for those that have been part of Palantir Weekly or SoFi Weekly, is you debate ideas out in a respectful way, and you try to come to some conclusions and hopefully provide analysis. So, yes, this has been going on for 49 minutes, but trust me, there have been, I would say, hundreds of thousands of tweets about this very topic today. So I think it's a timely debate right now.
And Amit, he's a masterful debater, and almost slipped up there. National champion. So, like, he loves this, like this, and I love it too. Like, I think I told you about it before, but I've done some debate stuff, not at Amit's level. Obviously, like, he would destroy me in debates, even if he was wrong, which he is on this. He could still win the debate because he's skilled at that. Tanner's a Canadian, so his opinion doesn't count anyway.
Yeah. I think it's funny, like there's these types of tools that people draw the line on. To be honest, I find there is so many places online where you can get bad information that pull you in the wrong direction or anything along these lines. Even us as YouTubers, right? Like if someone got into Robinhood, they had a 1 month time horizon to invest and they invested at 60 something dollars, and then look at it today. Wow, how bad of us to have given such information, but people are adults. You're not allowed going on these apps if you're not of age to trade. I think in the States it's 18 plus. Do your own due diligence. Be an adult. And if you physically can, if there's some sort of, I don't know what the correct term is, disorder that it compels you to continue to draw in these bad habits, there should be some tool to stop that from you from signing off. But I don't know. I don't see how people will go to another brokerage and use worse tools just to avoid something that they weren't going to use in the first place.
Yeah, it's just going to be a tab on the app or a section of the app. People just don't have to scroll to it or click on it, just like crypto, So
yeah.
I feel like the concerns are overblown. I genuinely do think that the Robinhood haters came out today and tried to use this as a moral argument. And Roy's not doing that because he has he's trying to make a logical argument for why it should be separated. There's going to be brand reputation. But a lot of people tried to come out here today and say they understand the ethical foundations of what is good or bad for investing products. I'm just like, no, these are bad arguments. These are just horrible bad. And if Robinhood listened to all these arguments the past couple of years, they would not be the company they are today.
And again, this is inevitable. You would rather have something like this where the house doesn't have an interest in you winning or losing. They're just providing a platform. You can get in and out whenever you want. You don't have to wait for that actual event. If your situation changes, you're like, man, I messed up. I need that money, or I'm reconsidering my bet. You can do that. That's infinitely preferable than the bookie at the bar that's going to break your legs if you don't pay up, or something that I think is parasitic like DraftKings. Not that I'm saying it should be illegal, but I just see it as a different type. It's not investing. It's not. But people should be allowed to do it. It's fine. It's okay. There's some downside.
Can we before we get into February metrics, can we talk deeper into why is Robinhood going after this market? Like why is this the next big vertical you think for them?
Well, I think there's two things. One is revenue. and there is a chance to onboard like a segment of the population that they've not reached. Like interest in retail and individual investing has grown immensely in the United States. I think that we'll hopefully see that trend in the UK as well. I think it's a net benefit for society and individuals, not just because of the wealth curve, but certainly it's there. But there's a lot of people that just don't know anything like that. And I do hope that we see some of those success stories. I'm skeptical, but that maybe the first time they download Robinhood is to bet on that election or to bet on this March Madness tournament. And then they're like, you know what? I'm like 28 and I've got nothing in retirement. Maybe can Robinhood help me out with that? I'm like, great. That's awesome.
Credit card, banking,
yeah,
the ancillary products will go on and on.
It's a flywheel. I don't know about like people that are just pure game. Like there will be some, but I'm skeptical how much, but like they've got a credit card, they have buy now, pay later as well through that. They kind of have a debit card as well. It's just a lot of different options. So it's a great flywheel thing. Having more of those basically lines in the water, that's a good thing. So for Robinhood as a business and as a stock.
Tanner, any other reason or same thing?
No. Yeah, I just think total share of wallet, new user base to go after. And hopefully they get their other ancillary products like spend, save, and long-term investing. Hopefully those people still have some form of long-term retirement or could use new products that would help, like advisory coming up,
What do you think, Emmett?
No, I agree. I agree with you, Roy. I think they're trying to go after a different market. I think someone said, I think Joshua might have posted this. It's a $50 billion market in the United States, sports betting, something like that. Yeah, if they get, they're doing what, $3 billion in revenue, to get that extra billion, $2 billion over the next couple of years, especially if the market is a little volatile. I think this is them hedging against macro uncertainty. right? And I don't know if sports betting goes up if the market falls down or something, but I kind of think sports betting will always be consistent unless we have a pandemic, because then sports will continue to happen or won't happen in a pandemic. But if they keep happening and Robinhood can be like the number 2 behind DraftKings, I mean,
this is not the launch of sports betting. This is the launch of event contracts. Okay,
it's sports betting, bro. It's the same shit. It's sports betting.
No. What I'm talking about is it's not about the college game. What I'm excited about, honestly, is for the Fed funds rate decisions, all the actual financial tools that investors will actually want a part of.
Yeah, I agree.
If they can bet on CPI, if they can bet on Fed funds rates, you actually will see long-term investors take bets on that, and that's where I think the cross-sell is going to be.
Yeah,
and that'll be fun, bro. Because like certain events that we care about, like JPOW or Trump saying something during his State of the Union, like those are massive events that get hundreds of thousands of people, especially in the finance world, interested. That could turn into a big market. It really could.
Can I share one more thing on that? Like Vlad had this long philosophical post, which is a great read, by the way. In case anybody like is kind of new to Robinhood, you've not seen any Vlad interviews or the way he discusses things. That's just the way that Vlad thinks. It's not him trying to like justify the morality of this product. He thinks philosophy. He thinks mathematics. He's just wired that way. So it's worth a read. There is. I don't think that this like is needed to like legitimize or legalize or whatever. But honestly, when people have a vested incentive in the outcome, they tend to be better predictors, or more honest rather. Predictors in the outcome. So like when people, for instance, and that's one of the reasons why both the Robinhood app, Polymarket, Kalshi did a better job than the polls in predicting the outcome for the presidential election, is simply because some people didn't want to admit that they were voting for Trump. And so they would be dishonest, versus if you were betting your own money on that, you're going to be honest in what your actual opinion is. And it's the wisdom of the crowd. It's a great thing to like Google, to research, that when people are not communicating with each other, but they're guessing like, a giant container of jelly beans, how many there are going to be. There's going to be people that are wildly off one way or the other, but the average of the crowd comes scarily close to the actual amount that's in that container. Now, the moment people communicate and share what their answers were, that's when it destroys that. But wisdom of the crowd. Do you remember I'm going to butcher this story a little bit, but the French trader that had like $40 million on Trump winning in the election?
Yeah.
Do you remember how he determined that Trump was going to win?
I forgot how he.
It wasn't based on the question, "Are you voting for Trump?" It was based on the question, "Who do you think your neighbor is going to vote for?"
I love it.
And so people would say Trump, and he actually thought that was more closely related to what they were going to do rather than what they were going to say themselves, what they were voting for. But that's alpha. That wasn't a bet to him. Like, he had an educated guess. Like, I'm sure it's still betting, obviously, but he probably had a higher than 50% chance of getting that right. And that's all we're trying to do here. And I think that those people should be welcomed at Robinhood.
The Kalshi partnership is interesting to me. I guess they're just leveraging Kalshi's backend to do this. Is that what you guys think?
Yeah.
Yep.
They're going to have to split some of the revenue with them, obviously, but the volume should make up for that long term.
The great thing about third-party partnerships is they don't have to be around forever. So you see this a lot with like Shopify, for example, where they partner with every single company under the sun. And then slowly they build things in-house and they drop those partnerships whenever they feel comfortable that their built-in solution is as good or better than what they were offered. So I think that this is a way of launching years earlier than when potentially Robinhood could have done it themselves. And then they can potentially do something like this on their own, especially as they build their own liquidity.
Yeah, I agree. I think it's a way for them to get quick in the market, but it's not like they're contractually obligated forever to use Kalshi. If they
look at the clearinghouse, Apex FinTech or Apex Clearing forever. 2018 came around, Robinhood Clearing.
Yeah.
Which is awesome. Yeah.
Which is awesome.
Okay, February metrics were pretty good, in my opinion. 150,000 users, 187 billion AUC. That's down from 204. 4.8 billion net deposits, another close to 5 billion month. cash sweep 26.2 billion, options basically the same 165 million, equities basically the same 143 billion. Crypto down from 20 to 14. Tanner got that prediction right. He thought it would be under 15, but still a pretty good year-over-year gain, 122%. And then margin, its highest ever at 8.7 billion. Tanner, let's start with you. Raw thoughts on these metrics.
Go down to the next page. On a daily basis, equities and options were actually up. So this is the shortest month, February. On a daily basis, they actually did more than what they did the month prior. So yeah, take into account the amount of actual trading days, which I think was 19 for February. Now, on that, I think that margin is going to just continue to grow every single month just based on pricing. So even if people start to use less margin, which Charles Schwab has come out and said that's really not what they're seeing right now, that I still think that this is going to grow. So one thing that I had a conversation about online with a couple of other investors was Robinhood is taking such large market share that even whenever there is a pullback in the markets, they might not see that same level of pain because, you know, if it's down 10%, they might have grown 5%. So you look at their assets under custody, and yes, that's down, but net deposits still went up 4.8 billion. So people are putting more money on the platform even as the market is eroding. So Robinhood is in such a growth stage that they are really, really helping with problems that might be seen in the markets right now. Just based on growth.
Roy, your thoughts on these metrics?
Yeah, I mean, like they were good, they were strong compared to quarter four. You know, down a bit, but that's cyclical is the wrong word, but volatile. Like you're not going to have the same print every single month. Stocks, crypto, they don't go up in a straight line forever. We had a big pullback in both. It's not surprising to see assets under management take a dip. It's going to when the market pulls back. I mean, long term, you can see what Robinhood's building. I especially agree with you, Tanner. That they are taking a lot of market share. So even in a crypto winter, and let's say we'll get to a bear market, I don't think we will, but if we hit a bear market, it'll pull back a good bit on the stock. But the actual underlying numbers, like year over year, I think that they will continue to grow, albeit slower. Just because they're going after a lot of market share, launching a lot of new exciting products, doing international launches, and then what they're putting out usually blows the competition out of the water. So margin, for instance, like they make it easy, but not too easy to sign up, going back to what we said before. But the rates, they're very aggressive in cutting that along with any potential rate cuts. And so like they're as good as anybody's out there.
I agree. I thought these metrics were really good. Margin balances, I think they will go up in March, but we need to have a good second half of March to try to get a little bit of that recovery. IBKR went down 5%, so nothing meaningful, but they did go down. I'd be curious to see if people got margin called a lot in the beginning of March, and maybe they took away some of their margin. Crypto was good. Equities, Tanner, I didn't even think of that. Equities and options were way better than January because there was 5 or 6 less days of trading. So
was it that much? I don't know if it was that much.
We had holidays in January.
There was 19 in February, so it's 3 days roundabout.
If you go to the website, I think right now you're clicking on dashboard, but if you click on the press release, it'll tell you the amount of trading days that they covered
in February. Okay.
And then just go to the January one to find those numbers.
Yeah, it's 2 to 3 days. That's the delta there. Yeah. So it's not 5 or 6, but still, that's good. I mean, that's not bad for them to have a higher amount per day in a shorter month. So I didn't even think of that, which is very hopeful for March. So here's the question to you guys. Do you think March can replicate February at all, or what do you think it looks like?
No.
We'd need a really strong second half, and I don't see that. It will be probably better than a lot of people are expecting just because the volatility works both ways. So even if people are selling and getting out, Robinhood makes some on that. Long term, it's still a lot better that things are going up. So I think it won't be as strong.
Yeah, to be honest, like the crypto volumes held up way stronger than I thought it would. 14.4 billion was great, I thought. So although I'm bearish on the monthly statistics of March, I'm not bearish on the company. but I can't imagine it's going to be super stellar. But there's a lot of room to surprise me, and they did surprise me last quarter, so I'm going to be pretty excited about March, just to see how much to the upside that they are versus my statistics, not versus the months that we've previously seen.
And it does help that there's a couple extra trading days in March too. So,
yeah, definitely.
Yeah, and the delta is 1 day. So February was 19, January was 20. I just checked on the trading days. Yeah, I agree. I think March is going to be tough unless the second half recovers. I do think options and equity has a shot to maybe hit some of those February numbers, or at least get within 5% of them. Crypto, I think it's going to be tough.
Yeah,
to get 14 billion, but I guess we're going to see maybe 5 billion, 5 to 7.
but as far as a stock, I think a lot of that's been priced in too. Like we saw how far Robinhood fell, and it had like 6 or 7 days where it went down, felt like at least 5% every day. And like, man, I was excited, honestly, because I'm a long-term investor. I think I doubled my Robinhood position during the fall. Didn't time the bottom perfectly, but I was doing more than just my weekly DCA. Resumed just the small weekly DCA now that we're on our way up. But the Robinhood position is almost fully built out to where I want it to be. If we get another big pullback, maybe I'll finish it off.
Can I ask you guys a question?
Real quick, I bought more of those degen options that Roy hates on Robinhood. $100 January 2027, baby.
And not just do I hate those, I hate people that use them. So admit we're no longer friends. No, just kidding.
Friends, bro. Can't talk anymore.
Now in March, let's count the full month here, or 17 days in the last little bit of the pullback. What did you guys buy more of? Nvidia or Robinhood?
Robinhood.
Yeah, well,
but it's close.
No, I bought 300 shares of Nvidia, but with the options and shares, it's a lot more of Robinhood. So
no, okay, well, yeah, I can't say the same, but
yeah, I bought Nvidia was the second most of anything that I bought. Well, PayPal came close too, so I had a good chunk of cash. Some of that was made from that hedge, which Amit hates. But ended up, basically it was PayPal, Robinhood, and Nvidia. And I don't know if I bought anything else significantly.
What is this? You're rubbing it all over your mouth. You're rubbing it on your forehead.
What are you talking about? I have no idea what you're talking about. I don't know, dude, it's something you clean your keyboard with. It's like it brushes the dust off your keyboard. You guys like my nails? I got a manicure today. It's nice, right?
Sure.
Yo, can we talk about Dan Dolev calling PayPal Nvidia, bro? I didn't get a chance to watch the pod yet, but Tanner clickbaited the fuck out of everybody to click.
It's not clickbait. He says it bar for bar.
It's not clickbait, but it was a hell of a title, and I just didn't have time this weekend. But I'm going to listen to it.
It's a great title.
Are you buying PayPal, Tanner? After that?
So here's the thing: I have been exploring re-entry of the stock. I sold out. But I was talking with Steve the other day, and he was just talking about what Dan said and everything. And I don't know. I think if there is, I'm going to go with Steve really quick. If there is an opportunity for them to split the amount that they're putting out to shareholders in terms of 100% buybacks right now into 50% buybacks, 50% dividends, I actually think it brings in a massive rush of new investors. And the numbers that Steve was telling me, if they put out 50% of what they're doing for buybacks, which is between $2.5 to $3 billion. What is it? No, a year, right? Year? Right?
Year. Yeah.
Oh, sorry. Say it again.
It's $5 billion. Yeah. Sorry. $5 billion a year.
Billion,
yeah.
6 billion. 6 billion.
If they were to put half of that into a dividend, it would be like nearly a 4% yield. Have you ever heard of a company go from no dividend to a 4% yield overnight, and then they could lower the buybacks a little bit?
And I think that they're going to go that direction. Like in Investor Day, I think it was Jamie Miller, the CFO, alluded to we've got this for buybacks through this year, and we're also looking at additional ways we can return shareholder value and shareholder capital, which is basically code for dividend. What else are they going to do? So at this valuation, I wouldn't mind if they did like a small dividend just so people are like, oh look, they're technically a dividend. I would not do like the 50-50 thing. I wouldn't hate it, but at this valuation, like the buybacks make a lot more sense because it's so stupid where it's trading. If we were at $120, I'd be like, yeah, go dividend.
So even I was talking with Steve about this, so I'll give him the credit. I'm not here to take his whole shine, but they have put something like nearly $20 billion into this company, buying it back over the last couple of years, and it has not yielded return. And
Yeah.
so that money essentially is just burning up into nothing because
That's
it's not,
wild.
yeah, it's just not yielding a shareholder return.
Yet.
So, sorry?
Yet.
But a dividend would have. So,
yes, but long term, I think that the buybacks here will outperform whatever an investor gets from dividends. Like,
yeah, but it's up to the investor. So the only thing that I hate about dividends is that, well, a couple things. So there's tax implications and everything, but let's take that out for a second. Is that it's very hard to start and stop a dividend. It's very easy to start and stop a buyback. So if you were going to go do a dividend, I would hate for them to do all dividends, $6 billion, something like this. I think it would be so stupid in case there's a pullback in the business. But $1 billion, $5 billion buyback,
that's
they'll
fine.
never cancel that.
That's
They could
fine.
build that forever.
And if they wanted to do that, I completely fine. But splitting it or shifting mostly into
That
dividend,
would
I think
still be
would
like a
mistake.
2% yield.
Yeah.
Like that's
But-
crazy.
But as far as buybacks, like if it just forms such a nice floor because their free cash flow is absolutely going up. Their transaction margin dollars, their net dollars are absolutely going up. Their margins are absolutely improving. Active users will hit an all-time high this quarter. Not the most important thing, but it's more important now that they actually have a real flywheel, unlike whatever they were doing previously. If the valuation stays right where it's at for 3 years, that would be really not fun. Opportunity cost. It's a real possibility with PayPal. But if it does, the almost $20 billion that they allotted to buybacks will mostly be used by that, if not all. And they will have bought back from their peak over 50% of their shares. It's tough to see. Like, that's the thing with PayPal. Is PayPal going to be like a 10x in 2 years play? Unless something really crazy happens in the markets, no. There's like no way at all, period. Like, possible technically, but no. It's as likely as PayPal going to like $10. It's not going to happen. But as far as like what PayPal's able to do, like I think that over the next 5 years they're going to hit an all-time high, and it's made significantly easier that float size is significantly smaller. Plus, what they're baking as far as innovation, they're looking at the actual bottom line. Even their stock-based compensation is going down, not even just per percent of revenue, but actual real stock-based compensation over the next 2 years. It's meaningfully smaller than it was in previous years.
It might be
they're
meaningfully
actually
smaller,
unsiloing, and long term, like it's tough to see much downside here. Less upside than other companies. So I think a good reward, a very low risk. I like it for a percentage of my portfolio.
One, they might be lowering stock-based compensation. It was always huge. A mature company like that doing like 6% of revenue was crazy. And then two, you said they were growing and you put up your hand like this, like it was some Robinhood stock. If you were to say they're growing, I think you should have done like that. Like they're growing, but it's
the free cash flow.
No, I think you were actually talking about transaction margin dollars, but I just meant,
I meant free cash flow. Like that's
one thing's
like,
for sure. None of us are investing in freaking Square, and that's where we can all be.
That's not true. Roy is. Roy holds
one
shares.
share because of you. But.
Not me.
I hate it. But I made a ton of money on buying puts on Square when it was like $96 because I'm like, Jack Dorsey is going to pay me some money and it will make up for all the pain and suffering and agony of Steve sticking me with $100, now like $55 worth of block.
But dude, I think Steve was talking to me today. I think the PE on block right now is like 11 or 12.
It is stupid. It is stupid.
That's stupid.
No, it's 14 at the most, but it's in that range.
Well, I don't think that factors in the lawsuits. They had a massive amount of fees and
Ooh.
fines assigned. I think is it over 200? I'd have to look, but I don't think it is. But if you're looking at, so a lot of people focus on the next
12.86.
12 months. If you look at 2026's PE, it's stupid low. I'll admit that. Like, even if they really underperform, like, that's one of the reasons why I sold out of my hedge completely, because I'm like, hey, is there further downside in block? I mean, there could be, but boy, it's like you've squeezed the lemon all you can, and maybe there's a little juice left in there, but man, not much.
All right,
Can we
let's finish up this last conversation with this topic. 2% is back on Hood. I've seen a lot of people leave for that 2%.
Yeah. I love
Tanner.
Mike jumping over there.
Let's start with Roy. Yeah, Roy, what were your thoughts on this?
Oh, first, Mike, he's a good follow. One thing I really like about Mike is he calls it as he sees it. So, does the same on Tesla as well. Palantir investor too. Finally, he's coming over to Robinhood. And one of the great things about this company, like, you can see how active Vlad is on Twitter, but it's not just that, but his team is very engaged with individual retail users, which they should be. And if there's features that are lacking, if there's issues, they want to address those. They want to, and they have a vested interest in doing this, of making their platform better and more attractive for retail investors. So I love seeing people come to this. I love the match. There's always people that are like, well, this is unsustainable and other companies can just do this. It's like, yeah. But the thing about Robinhood is a lot of the people that come over, well, first, yeah, unit economics are right there. Well, kind of. I know you got a post with it. I believe that they have to stay for 5 years to keep this full match, that a certain amount of it vests over time. And over 5 years, with the quality platform that Robinhood has now, assuming they don't even innovate a single bit in 5 years, which that's not going to happen. That's going to happen in 5 minutes. Do you see many people that are using this that are like, user experience is not that good. I'm going to go over to like Webull for their 1%. It's like, no, there's going to be a ton of people that come on just for the match, find out it's an amazing platform with all kinds of tools and things that they like, and they're going to stick around.
All the sports betting that you want.
I mean, true. That'll attract some people.
Yeah, I people were complaining about all the loopholes and all this stuff, and every time I would answer their question, I was like, no, there's no cap. Yes, there's SPIC, FDIC insurance. They're like, well, I have to keep it in for 5 years. That's not. I was like, motherfucker, you're getting 2%. Yeah, you gotta. Yeah, there's gonna be some way they get an ROI off of it. But the fact is, if you bring over $1 million, you're getting $20,000. And yeah. I talked to a lot of people over the weekend who have some heavy 7 figures from Fidelity Schwab that they are leaving for that 2%, especially in this market.
Yeah. I heard someone, he's like, I'm not going to lock up capital for 5 years. I might need it. I was like, go ahead, take it out. They're not locking you into anything. So there's no downside if you don't want. You'll be, in a new brokerage that is top of the line. And then the alternative is, if you do end up investing for a longer term and you don't need the money, well, then you got 2%. And this just ensures that the payback period. So they said the payback period for them, every 1% match that they give is about 1 year that they need to have that customer for. And so 2%, 2 years, well, they're getting 5. Okay. So this can go on forever. I heard a bunch of people say this is unsustainable and everything. It's 100% sustainable. They could go to the big banks and say, hey, give me a massive loan because we're going to continue to do this at 100% success rate. Now, on top of that, they still need to keep 1 year of gold. And then that's after gold. Good luck not using any of their other products. So, yeah.
And let me just add too, that's one of the things I love about Robinhood, especially as an investor, is that they're bold and audacious. That they'll do things that people have not tried, or at least brokers. That even relates to things that I don't particularly favor, like the sports betting, the events contracts. But I love that they're out there. That are not willing to risk and try new things, but they really watch, to see if the unit economics are working, if it's doing what their goals are, and they're not afraid to also say, hey, we messed up, we made a mistake. If you remember the initial Robinhood Gold event, they had the 1% match on everything. Well, the unit economics weren't working. And so they mentioned that in Investor Day. They said, hey, halfway through December, we're phasing that out completely. That's no longer going to be a thing. It wasn't working for us, wasn't doing what we wanted. Don't mind doubling down on things that are working and pulling back from things that are not. And that makes like whatever they're trying, like if something doesn't work, maybe there's a little bit of reputation damage. Like from that, I don't think there's any. I didn't see a single person complain about it. But yeah, I love it. I love that they're going for it, that they're not playing defensive mode, that they're not just trying to survive or grow like 5% each year. Yeah, great company.
Amit,
Yeah.
what are your thoughts on Mark Rober?
Okay, I've got to go, dude. We cannot be here forever. We gotta get out of here. But in terms of in terms of them taking away the 1% match a while ago, this is the byproduct of innovating. You're gonna make mistakes, and it's like, yeah, you might get some backlash here and there. Like maybe sports betting or election contracts, maybe or event contracts, maybe doesn't work. Maybe it's a total flop. But like, I will not blame them for trying, and I'd rather them have a ton of negative publicity versus never try, because then you're never going to get a chance to get a company to grow.
Do you think that there was a conflict of interest with the LiDAR company?
I actually have a video coming out tomorrow on this, guys. So
I wrote a tweet about it. This is the scummiest shit I've ever seen. I don't want to go into it, but yeah, I think there is some fishy stuff happening with Mark Rober and Tesla. And I think the reason he used what's the company's name? Luminar.
Luminar.
Yeah.
I think there's a reason.
Yes.
Well, there's some connections with the founder and Mark Rober, supposedly helping with foundation funding or something.
Called him his buddy back in 2022.
Yeah.
Earnings is coming up this week. Interesting.
I was actually surprised on the like even the results of the test. I didn't even care for it. Like, how often do we run into these fake roads? Like, even if we are using cameras and you have a perfect wall, the camera wouldn't be able to detect the wall. I don't think that that's a hard thing. Like,
I would have hit the wall, honestly.
Not even that wall. I mean, like a hyper realistic wall. Like,
no, but Tanner, the worst thing is
be the same as our eyes. So if we can't detect it, that cameras shouldn't be able to. But that doesn't, like, we're trying to replicate human driving, not this weird, like, I don't know.
But the video, they didn't even use FSD. They used
I get it. I'm not.
That's the part where I'm like, okay, if it was FSD and it failed, at least you have some argument. But like, it's not Tesla's actual software that they use.
And they didn't engage autopilot till like seconds before. Like, come on. Like, it seemed like that they cherry picked at least 3, and Tesla actually passed one of the 3 that were specifically designed for LiDAR to do well in and Tesla to do poorly. It's like,
yeah, it was just a big LiDAR test.
Yeah, Joseph Carlson, I like his take the best. Like, he's not a Tesla bull at all, as far as the stock especially. But like, there are cases where LiDAR is better in certain circumstances than full self-driving. It's a shame that that's not what was tested. And this is a technology. So unlike who uses like Robinhood and the sports betting, like, it's great what Robinhood is doing, but people's lives are literally at stake if the market goes away from the best product and goes to something that's inferior, and there's autonomy in the future. That will cost people's lives. This is not something that people should be treating as a joke, as a meme, or doing something nefarious to try to get something other than the very best technology out there for people. So it makes me very upset. I like Mark Rober a lot, which makes me even more upset. I don't know that it was his issue, more so than like he had a buddy that's like, hey, cool technology. Here's this cool idea. Cool, yeah, let's run with it. Perhaps a little naivete, but we'll see.
Yeah. Any thoughts, Amit?
Dude, I gotta go, dude. I cannot stay here for. I got shit to do. It's almost 11 o'clock. I need to sleep, so we're gonna end it out there.
I tried, guys. That was for you.
Yeah, dude. I usually would stay, but like, I gotta finish a bunch of shit. All right, that's it for us. We'll be back next Monday. Well, actually, we'll be next Monday. We are so. Tuesday, we are leaving to a event by Robinhood, and
spoiler alert.
Yeah,
well, we told people last week, but Monday we're gonna do a preview. Tanner had some good comments on what he thinks the product event is gonna be like. I think it's gonna be a fun event, dude. I think they're gonna announce a lot of shit, and we'll be there in person, so it'll be fun. So there you go.
Thanks, guys.
All right. Thank you, everybody. Everyone's Twitters and YouTube's in the description. I hope you guys enjoyed the exchange of ideas today. We will see you guys next Monday before the gold event on March 25th. Peace. Bye, everybody. Have a good one.